Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro-dollar. An immediate countering bullish piercing line pattern and bullish opening long white Marobozo yesterday, after the previous session's bearish closing long black Marobozo. Between the two of them, they could possibly make up a pipe bottom. The market rallied unsurprisingly from the purple neckline extension, currently 114.13, of the August to September 2020 head and shoulders top, pushing up through the June 2020 high at 114.22 and closing over the congestion between 114.82 to 114.95, formed from the January and February 22 highs. Overall, we still have a continuation from the dip and short pullback upwards from the break below the dark blue late January to very early March descending wedge pattern. The primary target has been reached, and we are making significant moves down towards the much harder to reach secondary target X1, down in the 113.56 zone. Looking above, we have the 2019 high at 115.70 and the November 2020 low at 116.02. Meanwhile, further below, well, apart from the late July and early August 25 low at 113.99 to 113.89 and the lesser Fibonacci line at 113.38, we have little away until the July 23 high at 112.76. So far today, a dip below the congestion between 114.82 to 114.95. We have since pulled back up and we're now looking like a possible indecisive doji cross right now. Cable, aka sterling against the US dollar. An immediate countering bullish long harami, a long harami yesterday after the previous session's bearish closing black Marobozo, and a fourth bearish black crow. The market opened just under the formidable bright pink neckline for the August 25 to October 25 head and shoulders top. That's currently at 132.29, but moved up swiftly, up through the lesser Fibonacci line at 132.46, and the combined August 24 high and 61.8% Fibonacci line of the June 16 to September 22 move, all at 132.65, as well as the bright green neckline, currently 132.96, for the August to October 2025 head and shoulders top, and the March 22 high nearby at 132.98. Indeed, prices pushed up through the previously mentioned congestion between roughly 132.98 to 133.20, with the top side being made from the purple neckline extension of the small April to May 2025 head and shoulders continuation pattern, currently at 133.20. However, the bullishness soon ran out and we closed just under the purple neckline. Overall, the market has developed from a late January to mid-March descending wedge pattern, currently 132.69 to 133.40, into a bright red early February to date bear channel, currently 131.74 to 134.17. Overall, in the bigger picture, prices maintain their stance within the previously broken and now repaired very shallow dark blue bear channel, dating between early July to early August last year, to date actually. That's currently at 129.62 to 135.89. So far today, seemingly caught within the old descending wedge pattern, and right now looking like the mauve neckline is the most interest to prices. We are looking like a possible indecisive spinning top, maybe possibly even a hammer pattern, but with a long tail on it. US dollar against the Japanese yen. A key reversal down yesterday, but only just after the previous session's bullish closing white Marobozo and fourth bullish white soldier. The high yesterday matched the previous session's high, with the market opening just under the May 1990 high at 159.61. As I previously repeatedly warned, the move upwards could trigger a mid-January to mid-March double bottom pattern. Thus we now have a primary target X up in the 161.49 area, for harder to reach secondary target X1 up in the 163.19 area. To reach these targets, the market's created a mid-January to date dark blue bull channel, currently 158.82 to 161.57. And the recent action is becoming yet another test of this pattern. Overhead, we now once more have the May 1990 high at 159.61, then congestion at 160.05, and the April 1990 high at 160.34. Additionally, I've drawn a new mid-September 25 to late January 26 bullish Andrews pitchfork. It's highlighted in bright red, and on this the market is a little underneath the middle time, currently 160.26. In a bigger picture, prices are still within the September and November 25 to date bright green bull channel, currently 153.71 to 161.15. Now so far today, nothing much, looking like an indecisive doji cross right now within yesterday's range, but close to that dark blue lower bull channel line. US dollar against the CNH, the offshore Chinese yuan. A bearish harami yesterday after the previous session's second bullish white soldier. I've drawn a bright pink mid-January to early March bearish Andrews pitchfork to hopefully show the recent bearish angle of attack and replace the two broken bear channels. They basically ran the market down until late February. The market yesterday peaked just under the bright pink upper time, which is currently at 690.86. Now further above we have the bright green short medium moving average, currently 692.44, which has previously capped the market like a makeshift downtrend, followed by the interesting bright red trendline extension, currently 693.56, of the May to August 2022 ascending triangle. Looking below, we have the significant 50% Fibonacci line of February 22 to April 25 move at 686.60. Now so far today, nothing much, looking like an indecisive doji cross based around yesterday's close right now. US dollar against the Brazilian real. An immediate countering bearish opening long black Maraboso and bearish engulfing pattern, if only just on the latter, after the previous session's bullish closing long white Maraboso and second bullish white soldier. Prices opened on the lesser Fibonacci line at 532.15, capped as they were just above by the declining mauve medium moving average, which is currently 532.62, and dropped down through the combination of the 38.2% Fibonacci line, the October 2018 to December 24 move, both at 527 even, and then the nearby declining green short medium moving average, currently at 526.21, and finally pushing below the lesser Fibonacci line at 524.07, closing just a little underneath it, and possibly making the last two sessions a pipe top. The continuing question all the recent action has left us with is whether over the last 3 weeks, whether we have either a double bottom or a double stroke triple top. This question is, as I say, still open. Now in the bigger picture, we are fantastically still in between the dark blue middle time below, currently at 517.31, and the dark blue upper time above, currently at 543.22, of the super important dark blue mid-December 24 to mid-April 25 bearish shift pitchfork. This long-running dark blue bearish shift pitchfork is still the very excellent showrunner here for this market. US dollar against the Mexican peso. A reactionary bearish long black Maraboso yesterday after the previous session's third bullish white soldier. Prices opened lower and dipped down, closing below the slowly declining mauve medium moving average, currently 1783.13, and the dark blue doubled up and breached upper bear channel line, currently at 18.2167 of that original November 25 to February 26 bear channel. We ended up closing just above the lower time, currently at 17.6429 of the newly drawn late January to late February bullish Andrews pitchfork. I'm beginning to wonder if this new pitchfork might be showing a new bullish angle of attack here. Now looking below, we have support at the small congestion between 1756.95 to 1759.58, containing the combined August 2017 and July 24 lows at 1759.58, with further below the pierced green descending short medium moving average, currently at 1749.48, with a little underneath the July 2017 high at 1743.74. Now, we have a small but significant pattern to consider here. Is the whole mid-January to end of February action as a double bottom Adam and Eve type, with a primary target already reached at 1790.80 and a secondary target X1 not too far above, up in the 1805.95 zone. I am beginning to wonder if target X1 is maybe just a target a little too far. Now, so far today, a lower open but supported by the lower time right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.